Welcome everybody to our webinar today. I'm really warm welcome. We're absolutely delighted that you can join us today. My name is Mary Barrett. I'm a mindset coach and podcaster, and I'm also the co-chair of the British Chamber of Commerce SESB. And the SESB committee is the Startup, Entrepreneurial and Small Business Committee. It's a fabulous committee full of people that wanted to grow their businesses, and we help and support each other in networking, giving each other opportunities and collaborating. And we are a very unique bunch of lots of different individuals, very diverse businesses, but we've all come together with one aim to really help each other be successful. So it's a wonderful committee to be the co-chair, and I'm really proud of us. Now, today, I'm absolutely delighted to share Jan Young with you. Jan is incredibly experienced in helping businesses start their businesses and grow their businesses. She's trained as an accountant, got lots of years experience, and she really knows this subject inside out. She's got lots of wisdom to share with you. She's open to questions. She's very used to sharing this knowledge. And I absolutely know you're going to find it very interesting, very informative, and very helpful. So I'd like to pass you over to young Jan, or Jan Young, who's now going to take you through the fabulous webinar.
Hello everybody, just setting up the slideshow. Hopefully everybody can see the first slide. So thank you very much, Mary, for that very kind introduction. There's a lot of pressure about my knowledge, but hopefully I can endeavour to share some of that with you. And just to start off with, just so you know who you're talking to, a little bit more about what we're doing. Today, we're talking about company registration and information for new business owners. So you've started your business, you want to get on and sell your product or service, but there's you realise there's a whole heap of other stuff that you need to know about running a business in Singapore. And that's hopefully where I can give you some guidance and some information. So just an agenda that we'll run through: who we are, talk about company registration and the information for business owners, and of course lots of opportunities for Q&As. I'm very happy to take questions and help you as much as I can, because I'm sure everybody has some specifics that are relevant to them, so that's not a problem. So a little bit about us. So I started Expat Consulting 6 years ago. I'm a UK qualified chartered accountant. I've lived in Singapore now for 13 years. So very experienced, I think, in terms of business operations and commercial operations in Singapore. One of our core areas is finance and accounting. We have a team of other chartered accountants, so we help on bookkeeping, accounting, management and financial reporting, tax and payroll services. In addition, we're also registered filing agents, which means that we're able to register companies. We offer company secretarial appointment, which is a legal requirement for all PT Limiteds. We provide nominee director shareholder appointments, registered office, and make sure that all companies are compliant with ACRA. And our third stream is business advice. So we do quite a lot of training, so these types of workshops, and we really try to encourage people who are listening and participating to be active and asking the questions they want. We offer tax planning and consultations, review about business processes, how can you improve your process, interim finance support, audit management, HR, and also we've started to introduce about personal data protection and what that really means for companies. So to move on, let's talk about the first topic, a core topic today, which is the company registration aspect. So why is it important to set up your company properly? There are three types of legal entity structure that you have in Singapore. Partnerships, where you have two or more partners joining equally. A sole proprietorship, so a single owner, but more commonly a PT Limited. The recent, and I'll go into this a little bit more later, there have been some changes in the last week from the MOM about the availability of letters of consent for sole proprietorship owners. And essentially that means that for foreigners, a PT Limited is the only option. And I'll go into that in a little bit more detail when I explain the new regulations that have come out. It's really important to be compliant with ACRA. ACRA do audit, they audit companies and they audit us as filing agents, and they rate you. And if they don't, they will take action if you're not compliant. It's important, obviously, then to be compliant, to be successful in bank account applications. And then the knock-on effect, obviously, for foreigners is making sure that everything is compliant and done in the best possible way to help you and assist you in getting an EP or LOC, depending on the requirements of what you're going. So I talk about company registration having 5 pillars, and these are core to what we need to do to set up a company. So firstly, every company must have a shareholder. This person or corporate entity does not have to be in Singapore. Administratively, it's generally easier, but they don't have to be in Singapore, but they could be elsewhere in the world. Shareholders have to be over 18. We need a resident director. Now, what we mean by a resident director is a Singapore citizen or a Singapore permanent resident, and that's important initially for foreigners. If subsequently you are setting up a company and then you are approved an employment pass, then you can actually become the resident director in that case, but you can only be a resident director for the company that you are employed by. So that's very, very key role. The other aspect is share capital. So share capital is the equity investment in a company. So legally, in Singapore, we can register a company with $1 share capital. When you are looking ahead to employing foreigners on whatever work pass it is, then you need to think about maybe, certainly increasing that, but that's the minimum you need, $1 share capital to register a company. The 4th pillar is a company secretary. A company secretary is a legal requirement in Singapore. If you only have 1 director, they can't also be company secretary, so you have to have 2 people. And the company secretary is listed as an officer of the company. They are expected to be conversant with companies law and ACRA regulations to ensure that they inform the directors and shareholders of the company what is needed to ensure the company is compliant with ACRA. So it is a really, really key role, and it shouldn't be underestimated, that role, because it is very, very important. And then the final one, is a registered office address. A registered office address is used primarily for government communication, so from ACRA, IRAS and MOM typically. It can't be your home address unless you get landlord and government approval. So quite often companies find it quite easy to use their corporate service provider's office address, and that's a general service that's offered. So those are the 5 pillars that we need to consider when we're setting up and registering a company. So how do we do it? So we get started. The first thing, and probably the most exciting thing, is the company name. The company name can be anything, providing that it's not too similar to any company or registered business already in existence. It can't be anything that would create disharmony in the community. And there are certain government names that it can't include, but it still gives a very, very broad range of options about what you may call your company, which obviously impacts on your branding down the track. I talk about the actors. So who are the actors in the company? So that means who's going to be a shareholder, who's going to be a resident director, and who's going to be your company secretary. So think about, in advance who those people could be. Share capital, we've said that $1 is sufficient to register a company, but if you're looking to apply for a work pass, then you should be looking to increase that level of investment, not only for that, but also because down the track, if you are looking to employ other people or to create your own website, you need funds in the company to be able to pay for those to enable you to get set up. And obviously then the registered office address, decide what that is. So once you've got your you know, who's going to fulfill all of those 5 core pillars that we talked about, the first step is to apply for the company name. And there's an ACRA fee of $15 for doing that. And then once you've done that, then you can register the company with $1 share capital. So that's all you need to do. And there's an ACRA fee of $300 to register the company. So, but then you have your own company. The second step is to open the company bank account. So the banks very understandably have their own procedures about anti-money laundering policies. So they do extensive checking, their own due diligence before approving bank accounts. But once you've gone through that process and your bank account is approved, then you would put your funds into that represent share capital into that bank account. And then you would show your company secretary that that money is in the bank, it's representing share capital, because then so they can say to ACRA and MOM validly that they have seen the funds in that business representing share capital and will increase the share capital of the company. The final step then is for foreigners. If you're citizen or PR, you're good to go. But if you're a foreigner, then you obviously have to apply for work pass. You cannot work in Singapore as a foreigner without legal approval from MOM. So really, really critical step. I'm sure many people joining this webinar would have been aware of the indications from MOM of changes around letters of consent in March. We have half of the information, and that was really, really helpful. So MOM have given their guidance now on letters of consent for business owners. So they have said, if you are applying now as a new business owner, you can, if you follow the process, then you will be considered for a letter of consent. There is no requirement initially to hire a citizen or a permanent resident. The length of the LOC will be given will be the lesser of 1 year or the expiry date of your dependence pass. So that's for new business owner. For existing business owners, your LOC will run until expiry date. On renewal, then there is this expectation to employ a local person for a minimum of 3 months at the qualifying wage of $1,400 and paying CPF. They are also requiring that on an application for an LOC, that the LOC applicant owns at least 30% of the share capital, 30% of the company, and is a director of the company. So there are changes, but it's possible, and we're working with MOM to make sure that we're following those new rules. We're still waiting on the guidance for if you have an employee who is on an LOC, what that means going forward. But hopefully that will come soon, and that will be exciting to see. So that's the latest information about from MOM. The share capital is important. We've said $1 to register a company, but you might increase that to support the funding and the available funds for the company to support salary payments for your work pass. Monthly salary levels are important because when you submit your pass application, you have to put a minimum monthly salary in that the company is committing to pay. So the company must pay that minimum salary level every month. MOM will also look at the qualifications and experience of the individuals. They will also look at what opportunities there are for future revenue. So if you have potential contracts, that is something they'll be very interested to see, because they want to see that the company will be generating revenue, and also that you have fairly considered a broad range of people in terms of hiring for those roles. So there is a landscape around it, but thankfully we've got a start to some really clear guidance from MOM, which is really, really good to see. So that is the summary about registering a company. So the next area that I will be talking about is key information for new business owners. So as I said at the start, right, you've got your business, you're ready to go, you've got your work pass. Oh, but I know there's administration, I know there's compliance, what do I do? How do I, and what do I do about tax? All of these questions, and this is where some of this information will give you some guidance and some thought to, if something happens down the track, you will go, I know there's something that I need to know and think about so I don't miss a trick. So congratulations, you've registered your own company, but you know there's more to do. So an introduction to key information to help you run your business more efficiently. Make sure you're compliant with the rules and regulations of ACRA, IRAS and MOM. Very, very important. Provide ideas to minimise overall tax liabilities by being aware of the different types of reliefs available. And I'm going to give you some top tips of best practice and some watch outs where things can go a bit awry if you're not aware. So the first element is accounting records. Now, however dull it might seem, it is really, really important to keep your documentation for all the transactions of the business. So the types of accounting records that you should keep are your sales invoices, your bank statements, and your purchase invoices, documentation from IRAS, contracts that you have, engaged people with. So for every transaction, if you think there has to be some form of documentation, which is important, not only to maintain proper accounting records to enable your accountant to then produce the accounts and help you, but also it's really important from a tax perspective. In the event of a tax audit, IRAS can and they do ask for the source documentation. And IRAS requests that you keep accounting records for 5 years. Now, those don't have to be paper records; they can be kept electronically. So that's the minimum period, 5 years, to keep accounting records for each transaction of your business. If you're using accounting software like Xero, very easy to keep your documents all organised, because you can attach an electronic version to the transaction as it's being posted in your accounts. So there's lots of good techniques and ways in which that it doesn't become an onerous exercise. The types of accounts are potentially confusing to people. So for me, there's 2 types of accounts. There's management accounts and the statutory financial statements, and by far the most helpful to a business owner are management accounts. So this is when that you recording your transactions on a monthly basis, that you get your P&L, you get a balance sheet, and this helps you understand how your business is performing. And how you design your management accounting reports is really important, because you want to capture information in the best way to help you run your business. There's no point me saying, right, well, you will just record all your sales in one line, and then at the end of the year you go, well, that's not very helpful because I want to see it by clients. Well, let's have that conversation earlier so we can design the best reporting for you. Management accounts are really important, very helpful, but they're the basis of what's required at the end of the financial year. When you get in your financial year end, it's all very compliance orientated about IRAS and ACRA, and the management accounts are the basis for the statutory financial statements. Financial statements are a legal requirement. The data reconciles and is matched exactly to the management accounts. And the disclosure requirements can be pretty onerous and a bit technical. So they're directed by the Companies Act, the Singapore Financial Reporting Standards, and the International Financial Reporting Standards. They are a lot of Singapore company law and accounting standards are very closely based on UK. So if you're coming from a UK background, this shouldn't be a huge surprise. Not much change. But these are really important. They are compulsory, and we're required to file the annual return with ACRA, which is obviously a very, very important milestone, and we'll come on to deadlines later. Moving on to tax and the things that we need to think about for tax. So tax residency is really important. A company isn't tax resident in Singapore just because it's registered here and you issue invoices in here. what's key is that the company is managed and controlled from Singapore. So you can't have an entity here with nothing really going on and I'm living in Vancouver. That will not be sufficient to persuade IRAS that it is a tax resident company. Tax residency is important because there are differences in the types of reliefs available. Obviously, tax resident companies are going to have more tax reliefs available to them than non-tax resident companies. So it's just an important strategy to think about when you're registering your company or your group structure. Companies are taxed based on the year of assessment. So this is linked to their financial year end. So for example, we've just surpassed the 30th of April 2021. Lots of my clients have an April 2021, but the year of assessment is 2022. So it's always the year later. There are two corporate tax filings that need to be done. One is the estimated chargeable income, or the ECI, and that has to be filed within 90 days of the financial year end. And Form C or CS, depending, there's different levels of detail required depending on the size of the business. So the IRAS are very helpful, is that they don't make tax reporting really onerous for smaller companies, which obviously is really helpful when you don't have a lot of resource to do this. So we've taken the 30th of April 2021 as our year end. The year of assessment is 2022. The ECI is due by the 31st of July 21. And then the Form C or CS is due next year, and we have to file it between the 1st of June and the 30th of November 2022. Don't worry about all of these deadlines. Your corporate service provider should hopefully be giving you all of this. We certainly do, and we help our clients manage this process. The difference between the estimated chargeable income and the Form CS is the ECI is an estimate, but for small companies, you should be giving the final numbers. And if there's a tax liability to pay, you will get a bill and you will be given a deadline to make that payment, so make sure you pay it on time. The differences between corporate and personal tax. So as an employee of a company, or as the shareholder director and an employee of the company, there's corporate tax to pay, but there's equally your personal tax to pay on your earnings from that company. So the timing is different. So corporate tax, we said, is relative to the financial year end. Personal income tax is filings based on income earned in the previous calendar year. So hopefully everybody filed their tax returns on time by, I think it's the 18th of April, relating to income earned between the 1st of January 20 and the 1st of December 20. And there's different tax rates that apply. So corporate tax rates, the standard rate is 17%, and there's a different reliefs available. And personal income tax is banded. So the first $20,000 is at 0. And if you earn more than $320,000, the top tax rate is 22%. And there's about 7 or 8 bands in the middle. So it does ratchet up as you increase your earnings bracket. So moving on to tax reliefs. For corporate tax, there's a really interesting tax relief available for new startup companies, providing you're tax resident in Singapore. So this is for the first 3 years of assessment, and you get 75% relief on your first $100,000 of chargeable income. And on the second $100,000, you get 50%. So it's really interesting tax reliefs. Once you've used those 3 years of assessment up, you still get partial exemption relief, though not quite as exciting, but still really helpful to have. And the details are on the slide there. So when we talk about trying to optimize reliefs, this is really, really important to remember what's available to you for corporate tax. And personal income tax, the most common tax reliefs for most people is earned income relief. And if you're female, then you are entitled to claim foreign maid levy relief, even if your husband is the actual employer of your maid, but it's an incentive to encourage women to go back to work. So very helpful to know, and don't miss out. For companies, I mean, one of the key one of the key questions I asked is what is tax deductible and what is not. So you should only claim tax relief for expenses incurred after your business starts to produce income, and the expenses are tax deductible where they are. The wording is very taxy, wholly and exclusively in the production of income. So that's a really key element. So common tax deductible expenses would include things like salaries, bonuses, CPF payments, building, developing your website, your marketing campaign. It can include entertaining clients, providing that's just purely for business purposes, so wholly and exclusively in the production of income. The common non-tax deductible expenses include fines, so you don't get tax deduction if you've missed a deadline, and you get a penalty, so you don't get tax deduction. And any personal expenses that you put through your business, I'm afraid you don't get tax deduction for. S-plated private vehicles, no tax deductions on those. And another one which comes up regularly actually is about charitable donations. So the IRAS have extended their tax relief available on that. So if you're donating to a charity that is registered on the IPC, Institute of Public Charities, public institutions, then for every $1 that you donate, you get tax relief for $2.50. So a 250% increase on your tax relief. So just helpful to know. Probably shouldn't decide where you're going to support your charities, but that's just something that crops up. I've touched on about how you might think about optimising tax reliefs available, because you have a series of tax reliefs available for corporate tax, but equally you have tax reliefs and different rates of tax associated with personal tax. So tax deductible for the company and taxable on the business owner are salaries. So remembering that you must pay at a minimum the salary approved by the MOM, really important. Any additional salary above that is absolutely fine to take as an allowable deduction. Bonuses, allowances. Non-taxable deductions for the company and not taxable on the business owner is dividends. This is really, really important and allows flexibility for business owners to take money out of the business. So that would mean that the company is paying tax on higher profits, but the tier 1 dividends paid to the business owner, to the shareholder, is not taxable on them. So if you're thinking about how to optimise tax reliefs available, you have your corporate tax reliefs, you've got your personal tax reliefs, you have your and then you have dividends as an option to flex about how you're taking money out of business. So a little bit of tax planning and forethought about where you expect your business to be is really important. And I'm sure there's a lot of people who can give advice on how you would do that. If you've made a loan to the company, then you would repay the loan and there is no tax impact for that. Payroll is another area that it's easy to miss a few things. So types of work pass we've touched on before. So we have the currently employment pass, S pass, LOC, typically in this working environment. The salary you must pay, I keep saying it must pay according to MOM, and the reason I say it is because MOM do check and they want to make sure that your companies are compliant. It is mandatory to provide all employees with a payslip every month, and salaries must be paid within 7 days of the last working day of the month. It is also at the end of the calendar year for the personal tax. You must give all your employees an IRA form, which is a summary of the income earned in that year. CPF fund. CPF is payable only on salaries for employees who are Singapore citizens or permanent residents. There is an employer contribution and there is an employee E contribution, and the employee gets the pay net of the employee contribution. Skills development levy is paid to SG Futures. Everybody, this is a cost to the company and must be paid for all employees. The rates are range between $2 to $11.25 a month, so it's relatively small. And the purpose of this fund is to provide subsidised training courses. Self-help groups, so this would be, this is very much dependent on ethnicity. So CDAC, CINDA and MEMF, and this is contribution paid by the employee. To help manage all of this, because there's quite a lot of deductions going on here, to help manage all of this, the most convenient way of submitting all of this and paying it to the central community CPF board is through e-submission. So so you have to apply for a CPF account, and then ideally submit a GIRO form so that you can submit your enter your data, and then they will all automatically deduct by direct debit, GIRO, the payment due. So that's really makes it really easy to manage. So moving on, we've talked about tax, we've talked about payroll tax and all how that links in. The next thing is to talk about ACRA, and again, you know, it is very important to be compliant with ACRA. So the types of financial year-end documents that we need to produce to enable us to be compliant is the statutory financial statements, which I explained earlier, but also board resolutions signed by the directors to approve the accounts, to approve the date of an annual general meeting, to approve a dividend proposal. Then the invitation for shareholders to join the AGM, and also the minutes of the AGM, which do need to be signed as well. So there's a whole host of documents, and they must be in place. Because the person filing, your company secretary, has to sign off that everything is in order before they can file. So it's really, really important to make sure that that's done. So the filing is the filing of annual return with ACRA. Now, not every company needs to file their financial statements. That you can, if you're exempt, you don't have to. But if you have a corporate shareholder, or that you are of sufficient size, then you do have to submit your financial statements as well, both as a Word document as an XBRL. The deadlines are that the AGM, the annual general meeting, which is the approval of the accounts, reappointment of directors, auditors, approval of a dividend might be in there, is held no later than 6 months after the financial year end. And then the annual return has to be filed no later than 7 months after the year end. If you miss those deadlines, then you will get a fine from ACRA. It is possible to apply for extensions if necessary, but there is a fee for that as well. So I think, you know, it's everybody's best interest to make sure that everything is in order, so to meet those deadlines. We mentioned about board resolutions, about approving year-end documents and things like that. Board resolutions are also used for other purposes as well. Some of the key elements or key examples of board resolutions is if you are appointing a new director, or a director resigning, if you want to pay a dividend, if you are changing your office address, or if you're or even if you are entering into a significant contract. So you might be saying, right, I'm going to take a 5-year lease out on an office. That is of a size that would warrant a board resolution as well. And then court pass. So court pass was introduced, I can't remember, about three years ago now, because previous to court pass, everybody had to transact on their Sing Pass, and the court pass is the company equivalent of a Sing Pass. It has been recently simplified, literally in the last 6 or 7 weeks, which has been really helpful for accessing court pass. And court pass, you have to approve a user to access specific types of government portals, so they can transact on behalf. But say the usage of it massively simplified in the last week. So it's become a lot more straightforward, which is really helpful. So moving on to probably my final slides before we open up for Q&As is sort of my top tips. And these are some of the things that I probably touched on in my slides, but I just, if you forget everything else, just try and remember these. So financial records, please keep business and personal transactions separate, because it will end up in a very complex web to unwind for your accountant. It will increase your accounting fees, and it clouds any visibility and performance of your company, which isn't helpful to you. Keep your accounting records up to date, because if you don't do it kind of at the time, you will forget. I know this from personal experience, so I try very hard. Nobody's perfect, but if you try and keep on track, then it will certainly make this less of an elephant in the room for you. And obtain source documentation at the time of the transaction. For tax, please pay your tax bill on time, otherwise IRAS are very quick to impose penalties. So it's just really, really good to make sure that you're on the right track there. I haven't actually touched on GST in this presentation. GST becomes compulsory if your turnover exceeds $1 million. So think in advance and speak to your service provider, your accountant, whether you need to be GST registered. You can become voluntarily registered if your turnover is below that, but there are pros and cons to that. So it very much depends what sector you're operating in. Payroll, ensure you pay salaries to foreigners, including yourself as a business owner, as per the work pass. I think I've mentioned that about 5 times now. Super important. And pay SDL. SDL, the Skills Development Levy, is always the one that can get missed. So please remember to pay that. It's not a huge amount, but again, it's important for compliance. Dividends. We talked about dividends as a useful tool to take money out of your business, and when you're looking at optimising your tax reliefs. If you want to pay a dividend, please check with your accountant that it's legal, and that means you have positive accumulated profits over time. And you also need to tell your company secretary if you intend to pay a dividend so they can prepare a board resolution. Changes to officers of the company, so that could be change of address, it could be change of people. Please tell your company secretary. You have 14 days to update ACRA for the change. And ACRA, just be aware of the filing deadlines, because it's really, again, super important to ensure that we meet the deadlines so that you avoid penalties. And hopefully, we certainly do as corporate service providers, we guide our clients through that to make sure that we are well within the deadlines, so there's no panics.
Thank you so much, Jan. That's been really educational and informative. I'm sure we've all found it very insightful. Certainly, I wish I'd met you when I set my business up in Singapore. It solved a lot of the headaches that obstacles I had to go through when I set up my business. So really, really great work. Thank you, Jan. There's other events coming up. I think Sabina's going to share a slide to tell us what other events are coming up soon. There we go. We've got some, the Chamber is always running great events. So please take advantage while we can and come along and do these webinars until we can get back in person again. So some great things coming up, as you can see there on the screen. And for those of you who attended today, thank you so much for your time. You will get the opportunity to fill in a survey. So we urge you to do that so we can meet your needs better and how we can improve as a chamber to give you what you want. So thank you everyone so much for joining, a really great session. Thank you.